Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis for the week starting the 18th of November. Hope you all had a great trading week last week, and if you didn't, just remember that it's it's only one break even or bad trading week. We manage as long as we manage our risk and go for more than we risk on our reward side, we should be all right. If you're a new subscriber or new watcher, welcome. And if you're returning, thank you for returning back. If you enjoy and like the content, definitely please like, subscribe, share. And if you have any questions, just leave them in the comments section box below, or you can email me at info@trading180.com. So let's get into the supply and demand technical analysis, and we always start off on the US dollar index, the Dow Jones US dollar index, which is a measure of US dollar strength against the basket of the major currencies like the euro, the pound, and the yen. So if you're looking to buy the dollar, I would probably advise, I'm not a financial advisor, but this is what I do, and I look at the US dollar index to gauge overall dollar strength, and especially try to wait for prices to come down into demand zones if I want to be a buyer, and if I want to be a seller, then obviously supply zones. And if prices do come down into this zone and prices get a bit weaker, this just represents a buying opportunity. I'm buying at a cheaper bargain value area, so I'll be looking for price to come down here, and then in correspondence to any of the dollar Forex pairs like the dollar yen, dollar Swiss, and look for demand buying opportunities on those currency pairs. So this week there was fairly good news, but I think overall we are at really an expensive area, and it's always good to zoom out, right, and really look at what's been happening, especially over the year. So if you click on this button right here, YTD, which is year to date, you can see that from this year, pretty much the lows, and these are the highs at the end of the year. Now the Federal Reserve are looking to hike interest rates, which is usually positive for a currency, in December, and I think there's going to be 2 or 3 next year. So just because they're going to hike rates, if I was going to be a buyer of the dollar, I'd be wanting to buy it at a cheaper level. So you may see in the run up to the interest rate hike, prices start to come down and sell off, to take out some stops, etc., right, so that the big institutions can buy for a cheaper price. So it doesn't, just because you see prices falling or going lower, doesn't mean that the dollar is weak overall. Price doesn't always reflect value, and value isn't always reflected in looking at price. So if you do want to be a buyer of the dollar, then this area would be probably a first area to look to get long. If not, then you're probably looking at somewhere around here. And again, we don't trade the the Dow Jones dollar index. We just look for price to come into here, and then look for buying opportunities on any of the Forex pairs. If you're looking to get short, then again you'd be waiting for prices to come back up into this supply zone before looking to get short. And again, if prices do come up into here, then you'd be looking for selling opportunities on any of the dollar Forex pairs. So moving on to the dollar yen. So this week, again, we did get a bit of bullishness, but we've sold off a little bit down into this demand zone. Again, going back to the dollar index, we're not quite at this demand zone. Doesn't mean that prices on the dollar yen can't start to go higher, right? But if you're looking for a bit of confluence, then probably wait for the US dollar index to start turning bullish at some point, and preferably within the demand zone. And if this level doesn't hold, then again, this would be your second area. If you're looking to get short, then there is a supply zone, and we created a new one just right here. if you and also if you want to know how to draw supply and demand zones, then if you go to the YouTube channel and this video right here, supply and demand zone trading, free forex trading course on exactly how I draw my supply and demand zones, and also check out a lot of the other content on here as well. So yeah, pretty much we're just waiting for prices, you know, to come down to, you know, any one of these levels. If we are in a risk on environment, meaning that everything is, you know, pretty much good in the world, and traders are looking to, you know, looking for a return on investment, then the dollar would be really the currency to buy, as they're hiking interest rates. Japanese yen, they got negative interest rates, and their economy isn't doing too great either. So risk on, definitely look to be a buyer of this pair. Risk off, on the other hand, when there's a bit of turmoil, uncertainty, you know, Trump trade wars, the Japanese yen will benefit from a risk off environment. So if the stock market starts to sell off, then you know you do definitely want to be a seller. But just because the stock market is, you know, selling off to a certain extent doesn't mean that you should be a seller. You know, again, they could be just selling down to levels, or price could be going down to levels where you know, bargain hunters are going to be active and buying. So look for, you know, you should really kind of try to read the news and gauge, you know, sentiment as to why, you know, the stock market is, you know, falling or selling off, or, you know, because if there's no news and the market's going down, then, you know, it's just probably just some profit taking. Anyways, if you're looking for, again, selling opportunities, you're probably waiting for price to come back up to this supply zone before looking to get short. Dollar Swiss franc, and again, last week we came up into this supply zone, and we're, you know, pretty much selling off again. So what I'm going to do is I'm going to, actually, I'll keep this zone here. We've created pretty much a new supply zone within this area. In fact, I am gonna get rid of this one. This was a long-term supply zone from this area, which has been touched, you know, once, twice, and looked like a bit of a stop hunt. But I'll delete that, and now we have a new supply zone. If you're looking at, you know, getting long, again, this is probably going to be the best area to try and look to get long. We have touched it a few times, so I'll be looking for probably more of a fresher area, so probably more down into this 0.995 area where prices haven't really touched. If prices, you know, do come further down, then this is definitely going to be my preferred area, this 99 area, between 99 and 98.5 areas where I'm, you know, I like to look to get long. As we got, if you're looking at, you know, a pullback, we haven't really had much of a pullback at all in the past, or since mid-September, right? So if you're looking at, you know, the lows to the highs, we haven't pulled back at any point to the 50%, which is fair value between a low and a high price. We haven't pulled back to fair value, and price tends to usually pull back to some sort of fair value at some point. So again, maybe in the lead up to the interest rate hike in December, we could see some dollar weakness and dollar selling off, and again, just creates an opportunity to buy the dollar at a better price, right? Swiss franc again is pretty, I would say, weak. They're not looking to raise interest rates anytime soon, so you should be all right with buying on the demand zones if you're looking to buy the dollar at demand zones. Again, not every demand zone is going to work out, but as long as you manage your risk, then you know, we're just buying at bargains, and letting the, you know, risk reward work in our favor. Dollar CAD, and the dollar CAD is also one that the Bank of Canada raised interest rates, but it's been slowly weakening in against the dollar, and really it's because of oil. And if you look at an oil price chart, and in fact, let me go to oil. All right, what you can see is this massive sell-off right here, right? So the Canadian dollar is a beneficiary of oil prices, as it is Canada's main export. And if you know, the price of oil is selling off, then you can be sure that pretty much the Canadian dollar is also selling off. Doesn't mean that the Canadian dollar is, you know, potentially you know, weak in a sense that it's you know, it's not valued. I think that when oil does start to, or if oil does start to turn around, then the Canadian dollar is really going to be an absolute bargain, you know, buy. So if you're looking to take advantage of any kind of Canadian dollar strength and dollar weakness, then this is pretty much your opportunity. If you're looking to buy the dollar over the Canadian dollar, then you're looking at, you know, any of these areas here. Now, if you do get you know, a cluster of demand zones within this area, then one of the things that you should do, and I talk about it again on the YouTube channel, and it's a video called the supply and demand order flow equation. One of the things that you have to do is understand where other traders are going to be most likely to buy and sell. So we know that this area, higher highs, higher lows, are being made, so these are areas of value. But where are other traders likely to also, you know, buy, right? So from a technical analysis perspective, you know, you're going to have an area of support and resistance within this area here, right? You can probably see it around here, where you've got resistance, support, bit of support and resistance, an area that has been used in the past. So if prices come down to this area, and anywhere within this maybe 1.308 to 1.305 area, we know that there are traders that are going to be looking to buy, looking at that area of support and resistance, entering what is called willing demand, right? Because they're looking to place new trades, they're willing to enter the market. There are traders also looking to take profit at somewhere if they've got in up here, and if they sell to, you know, to enter a trade up here, and you picked off the absolute tops, where are you looking to take profit? Right down around here, first trouble area. And if you sold at the top, you got to buy to exit your trade. So hopefully there should be a cluster of demand zones. There's also dynamic support, which is basically trend lines and lower highs and lower lows, and higher highs and higher lows, and joining the tops of those and bottoms of those, as well as dynamic support and resistance that I also apply to areas on a price chart. And this gives me you know, basically the psychological element as to why traders from a technical analysis perspective will be buying and selling in an area. So don't forget to check out that video. So these are pretty much your areas if you're looking to be a buyer this week. And again, doesn't mean that this is going to be a guaranteed buy. Depends on what happens sentiment and fundamental wise with the dollar. But there are a few areas where you might want to look to potentially get long or short. As you can see, we can see there's, you know, several areas in the past where prices have reacted around certain areas. So those are your options for the dollar CAD, New Zealand dollar, US dollar. And New Zealand dollar has just been a bit of a tear over the past couple weeks. Broke through this supply zone here, and now we are at a level where I actually quite like, and I'm very interested in potentially shorting, depending on obviously the what happens with price and sentiment. So we've just created a new demand zone right here as we've made higher highs. But right now, what we're seeing is price come up into this supply zone here, around this 0.69 level I'm interested in. We've got, if you look at it, got a bit of a level of support and resistance in this area, and you get, you know, what traders might consider overshoots. You know, levels of support and resistance aren't exact, but it's an area. You've got a round number, right, coming up. You've got pretty much from the overall high, yearly high, to the yearly low. You've got, you know, the 50% area as well. 50% level is fair value, right, from the yearly highs to the yearly lows. Bit of a retracement. And also, if we look at dynamic support, or dynamic resistance in this case, which is the 200 period moving average, we've got a reaction down here, which is a previous supply zone which sold off. But we've also got another moving average, and I can't remember which one's which, if this is the EMA or the SMA exponential or the simple moving average. Doesn't matter really, but one of them, you know, they do react. Prices can react off of that. So we haven't touched it from, you know, when we've basically crossed here. So net potentially we should have some supply. And again, if you want to know what I'm talking about and you're a bit lost, go to the supply and demand order equation video that I pointed out earlier, and it explained pretty much all that I'm talking about here. So setup wise, this is a decent setup, this area right here. And again, just waiting for probably price action and some potential sentiment. But again, wait for the dollar index to potentially maybe sell off a bit more, you know, maybe come down to this area before looking to and look for that to turn around, and then look for maybe price to turn around on the New Zealand dollar. Again, this is not a recommendation to buy or sell. This is, I'm just telling you what I'm potentially doing in this zone right here. If you want to be a buyer of the New Zealand dollar, then at the moment you're going to have to wait for price to really come down into this area here, this demand zone here, before looking to get long. Pound dollar, and the pound really has been suffering over the past we can see pretty much from the beginning or middle of the year. Is that middle? I say even before that, April, May, mid-April, and it was really just a given simply because of Brexit and the agreements. Yeah, if you managed to potentially get some profit from a few weeks ago, recommended this as a, you know, a sell. I got in myself, took some profit, but you can see where prices made higher, lower highs and lower lows. We've created a new supply zone right here, and if prices do come back up to this supply zone, this would be the first area that you'll be looking to potentially sell. From a buying perspective, right, we can see where we're at the bottom of this this range. Now, just because you have trading opportunities, you know, at demand zones, doesn't mean it was the best area to actually get, you know, long, right? So let's say, for example, you know, prices have, you know, decided to, you know, turn up right here, and you know, demand is coming into the market. You have to ask yourself, is this a bargain? Right, this is a bargain price for the pound versus the dollar, right? At the moment, with Brexit going on, with the you know, the dollar and the Federal Reserve raising interest rates, I don't think this is necessarily the best area to look for a buy. Does that mean that prices won't go up? Prices can do whatever they want, but you have to try to look to make the best choices when it comes to you know, looking at value and understanding value, because what you're actually doing is saying that this is a bargain area for the pound against the dollar. And personally, I don't believe so. And I'm not in the you know, I know this is a technical analysis video and this is a bit of a little rant, but you know, you really have to start thinking about selecting the best areas when it comes to trading. And this is it goes really beyond what you're seeing on a price chart, right? You've got to look at why, you know, the big money is going to be investing and buying here, right? Or why they're going to be selling in this area. And in fact, on the euro dollar, I think it is, I'll talk about that as well, on the euro dollar. So these are pretty much your options. If you do want to be a buyer after what I've said, then pretty much this is what you're looking at. Maybe a bit of a pullback down into this area here before looking to get long. Looking to get short, this is the first area you're looking to get short. Pound yen, and pound yen, again, with the uncertainty of Brexit, we're creating, you know, lower highs, lower lows. So we've got supply zone right here. Again, if you want to be a buyer of the pound, this is the first area to buy, if we're looking to be a buyer of the Japanese yen, then you're looking at anywhere within this area here. And again, look towards let me clear this, matter of fact, right, you're looking towards dynamic, diagonal and horizontal support and resistance areas within this area here. Moving on to the euro dollar, right? Euro dollar. And earlier this week we did have, from last week, end of last week, we did basically had a gap down through this demand zone. And again, going back to what I was saying before, week before we had, if we let's go back to this right here. Now, a lot of traders, and any traders who trade the daily time frame chart, would have seen this as an a nice engulfing candle, maybe an area of demand, right? And that they thought that potentially this was a potential bargain, right? This is, demand zone. Everyone's looking to potential buy. People are taking profit here. New traders are entering here. But again, the question you have to ask yourself is this really a bargain at this potential time, right? The euro going through, the Italy budget, Brexit, etc. Right? Just because you see an engulfing candle, right, at a level of demand, is that really the smartest, trade to take? Now, some people who trade on lower time frames will take advantage of take advantage of this, etc. Right? It's not like I'm saying everyone's going to lose, but if you're looking to trade for even the long term, let's say for example you're looking to hold this or whatever it is it really the smartest thing to do? Now, some people will obviously take advantage of lower time frame trading within this area and probably did make some sort of profit as prices went higher, but again, was that the best trade to take, right? Knowing the backdrop and the uncertainty that is going on, for me, it's not the best trade to take. Now, something up here and a bit of a pullback would have been the best trade to take. And everyone talks about trend, right? We've got lower highs, lower lows, right, being made. So why not forget taking a lower probability trade here and wait potentially for prices to come up to here before taking a trade at least down to the lows? And you were rewarded if you got in on this trade, right, with obviously this move, a couple of 100 pips to the downside. And obviously with the dollar raising interest rates, decent GDP, if I say decent, well, better than all of the other major economies when it comes to GDP and the cycle and stuff like that. It's a no-brainer to buy the US dollar. So this is the smarter play. Counter trend trades, if you don't know what you're doing and why you're buying, if you're only buying from a technical analysis perspective, is very difficult for traders. The reason why people say don't try to catch a falling knife. Of course you can catch falling knives, but you just got to know how and why you're buying. If suddenly the dollar, there was no prospect of an interest rate hike or something had happened drastically, then this would look like an absolute bargain for the euro, right? But in this time, nothing had changed pretty much. So it was just pretty much a profit taking pullback, and then you just getting short around here, right, in the supply zone, right? And also as well, on top of that, definitely check out another video that I did this week, and talks about supply and demand, technical analysis, and basically, was this area, right, in this area here, a good place to buy, right? A lot of traders would have seen this area here as a level of support, and when prices came back to this area, my argument was that this is not the best place to buy, definitely not. And as we can see, traders who did get in on the short side, even on maybe lower time frames like the 4 hour, and potentially even maybe the 1 hour, right, maybe even lower, they might have maybe got some sort of profit, but it really wasn't the best place to buy, and I explained why in that video, so definitely check that video out. But now we're coming up to what I would consider one of the best places to buy. I'm gonna get rid of that and get rid of this, and we've created a new demand zone, I think. 1 second, let me just see if that's a okay. So the supply zone really starts from here to here, and where are we now? Right, this is where supply zone is. So now you have to start to look to see where other traders are going to be looking to buy and sell. And I think anywhere within this area where you've got support, right, you've got a bit of resistance. So if prices do come up into this area, this should be the first area to look to get short. Doesn't mean that you should, but this is the first best area to try to look to get short, right? Because from a high and a low down here wasn't the best area. Up here now is where I'm looking to potentially get short if I get the right, you know, kind of price action, what I'm looking for. And again, just look for areas to short. We are creating a demand zone for the euro. Let's not forget about the euro just in case. And if you do want to be a buyer of the euro, then you'd be waiting for price to really come down here before looking to get long. Anyways, spent enough time on the euro dollar, euro yen, and the euro yen. So last week we did come down into this demand zone. We can get rid of this one right here, and again we've pretty much just moved sideways all week. If you do want to be a buyer of the euro, then I'd probably be, you know, advised to wait for price to really kind of come down into this area. Or if you're looking to be a buyer of the yen against the euro, then you're pretty much waiting for any prices to really come back up into here as your first opportunity. Not much to say about the euro yen. Euro pound. This is going to be a very volatile pair leading up to Brexit. So prices kind of broke through that supply zone. We did have prices touch this demand zone. So we can delete this demand zone here. Demand zone pretty much held anyway. But now we've created a new demand zone here. Right, and we're up into what would have been considered a bargain area for the British pound previously. So if you're looking to buy the pound over the euro, this is the first area you're looking to buy. If you're looking to buy the euro, then you pretty much missed your opportunity. You have to really wait for prices to kind of come down to this zone here, or if prices make higher highs and higher lows in this, you know, past this area, then you'll be pretty much looking for demand zones to be created at the higher low before looking to get long. So let's say, for example, prices did something like that, it would create what we call a demand zone, depending on obviously where the candlestick is, and then you'd be waiting for price to come down into this area before looking to get long. Moving on to the Aussie US dollar, and Australian dollars also been strengthening. So I did manage to get in on this, you know, this trade from last week, and managed to take some profit, and then the second half of the profit, you know, pretty much got out for a tiny loss. So I did make some money on here. I knew this was going to be a problem area potentially. So if you did manage to get, you know, long on the Australian dollar, you're doing, you know, pretty well. But from a shorting perspective, I'm probably looking to short this currency pair. Here would be probably the first area to look to get short. I'm going to extend this demand zone down to here, from here to here. So if you're looking to get long on the Australian dollar, right, then you'd have to wait for price to really come down in here before looking to get long. This is a decent area to look to get short, the 73.50 area, but again, it just depends on you know, dollar strength or weakness and sentiment. Right, I think this whole area is being used, you know, support, resistance. So traders are going to be looking at this area here you know, as an area to potentially either take some profit, you know, enter new trades, but again, depends on the price action and what's going on with the Australian dollar. You also have some, I think probably maybe let's look towards the 100, see if there's anything up there. We've got the 200s up here, we've passed the 100s, so maybe a bit higher. I don't think we've got maybe some 50s or the 21s. Nah, they're all below price action, so you haven't got any dynamic. I don't think you've got any diagonal, so you've only got horizontal there. You've got a bit of horizontal further up as well. And horizontal, when I say horizontal, I mean horizontal support and resistance, so maybe something like that as well. So if that lower area doesn't work out, then this area here is going to be, this price area here is going to be the area of value that you're probably looking to short. And then finally we've got the Australian dollar, Japanese yen, and we did get a bit of a sell-off. So if you are looking to sell right now, this would be where you'd be looking to get short. If you are looking to get long, until prices again make new highs, there is demand here, to be fair, but I don't like to, you know, draw that demand zone until prices make an absolute new high. But I will put it on here just in case, but just be warned that it's not the strongest area of demand unless it makes a new high, right? So a higher high. So I'll put it on here as there is some demand here, but just be aware if it doesn't make any, you know, new highs and prices do come down here, it's a lower probability trade. I'll probably be looking for, you know, obviously prices to come down here before looking to get long in this currency pair, as I'm buying at a better discount. And also remember that the Australian dollar, Japanese yen is highly affected by risk on and risk off sentiment. So again, keep an eye out on the sentiment, you know, around, especially like, you know, stock market, etc. So yeah, that's pretty much it for this week. If you did again enjoy this analysis, or you have any questions, just leave a comment in the comment box below. Don't forget as well, I have a free fundamental analysis course. When you click on the link in the description box below, free fundamental analysis course, and then it will take you to, you know, this page here, right, where you can watch the modules, right, and you get taken to the fundamental analysis spreadsheet, which is the screen I had before. And this is just my opinion on you know, my what I'm buying and what I'm potentially selling, right? And this doesn't take into account sentiment. This is just purely based off of fundamental analysis, right, and where countries are in their business cycle and interest rate hiking or cutting cycle, right? So again, if you have any questions, just you know, email me and I'll be happy to go over any of the analysis in any of the videos with you. Don't forget we got that. And yeah, I hope you have a good trading week, and take care, and I wish you all the best. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.